Good morning, everybody. We're just kind of waiting for the open here, and what we're going to do is we're going to take a look at our opening. I always use the 5-minute chart for the open. I want to take a look at the signals that I get from the support resistance. Those are the two lines there. The solid line indicates if it's on top of the blue line. That means in the dashed line, that means it's indicating a down day. If the blue line is above the solid line, then it will be an up day for the spread. Okay. We got a couple minutes, not too long here before we open. We should get the first dotted line here in the first 5 minutes after the open. Dominance is just a little bit higher, not a lot. 0.13, 0.08 dominance, so it's a little ticking up a little bit, but it is positive, at least on the 5-minute chart. We're bearish on the RSI cross, and the Chandy momentum oscillator is trending lower. Okay, but so we don't know if it's going to be an updated day. Like I said, I don't like to predict what the indicator is going to give us. I just want to see what the indicator is going to give us when it does, in fact, open here, which is in just a few minutes. Let the indicators do the work for you. This is a very, very simple trade. Either it's going up or it's going down. There are days where it just kind of does nothing at all. But generally, you're going to get a fairly good signal about 80%, 75 to 80% of the time. The 5-minute support resistance indicator is going to tell you exactly which way this market is going to go. So the solid line and the dotted line should show up fairly soon here within the next couple of minutes. We'll see what the indicator is, and then depending on that indicator, will either go long or will go short the spread for the day. And then once we go long or short, then we make a determination at the end of the day whether we're going to stay in the trade and make it a swing trade over a 1 to 2, 3 day period or longer. But it really depends on the open. So I'm not currently in a position right now. I'm just waiting for this to open. And so when it does, then we'll take a position, and we'll take a position within the first 15 minutes, usually between the first 15 minutes and the first 30 minutes of the market opening. We should get the first bar here pretty soon, next couple of minutes. Let's just see. We're a little bit bearish here on the RSI. Dominance has turned negative now on the 5-minute. Remember, this is a 5-minute chart, so all of the indicators are for this time frame. Okay, it's gone up, it's gone down, it's been kind of a little bit more volatile than usual, and these are not large percentage moves. Let me show you what it looks like. I mentioned this before, but let me show you what it looks like with a candlestick chart. You can see that there's the wicks on the candlestick charts for this. When you put these two instruments together on a single chart, is kind of crazy. It's very, very difficult. You could use a line chart. I like the line chart. You could use an area chart, but I don't think the area chart looks very good, and it's hard to tell anything from that. So I use a line chart. That gives me the best indication, I think, of which way the spread is going. So if we're doing a down trade, if we're doing a short trade, where we're selling the first instrument, we're buying the second. So we're selling the ES, we're buying the YM. If we're doing something long, we're going to buy the ES, and then we're going to sell the YM. That's a long trade. One of the things that you need to do is go into these trades very, very quickly. So you need to buy one and sell one quickly. You can't put in a limit order, because what happens with a limit order is that you might get one side filled, but the other side won't get filled, unfortunately. So you have to enter these at the market at the exact same time. And generally, the percentage move between these two is very, very small when you do enter market orders for both instruments. So the advantage here is that you don't have to place limit orders, but it's also a disadvantage at the same time. So there we go. If the dotted blue line is above the solid line, that means it's going to be a positive day. So what I want to do is I want to take a long position. I'm going to do that on Trading View. We're going to take a long S&P. We're going to take a short YM futures, and that's our trade for the day. And we'll come back at the end of the day, and we'll see how we do. So stay tuned. We're going to come back. We're just 15 minutes into the open, and we will be back. The end of the day, and we are doing pretty well with our position here. We're up $680. So the signals we got this morning were pretty accurate. Now on the 5-minute we had the up signal, and of course on the 4-hour looked pretty good. We're also getting good movement higher on the daily. So all the signals worked really well, especially the opening signal, which told us that the trade would be higher, and we entered right around here, and we're here right now. So it did come down a little bit. I think at one time we were up close to $900 or $800, but right now we're at $700, and so it was a good day, good day for the trade. And so I'm going to close that out, and then in the next video I'm going to show you how to set this up, this chart on TradingView, as well as some additional tips for entering these trades. All right, so I'll see you in the next video. Here in just a few minutes, so we're just going to take a look and see what the signal looks like. The spread is up today, so we're going to kind of look at that and see what kind of signal we get at the open. It's 9:29. We got about a minute to the open, and then we're going to see the 5-minute bar come up, and then we're going to see the 15-minute bar, and then we're going to take our position based on that, just like we did yesterday. That's all there really is to it. There's not really a whole lot of other analysis that you need to do unless you're going to do a longer term swing trade. So you can do day trading with this, and you can do swing trading, but generally you stick to one or the other. If you're going to do the day trading, generally during the day, once the signal is given, it stays good for the rest of the day. So if it's positive, it's going to be positive for the rest of the day. If it's negative, it's going to be negative for the rest of the day, and you can pretty much just kind of come back at the end of the day, take your profits, and you're good to go. Swing trade, you need to look at the daily charts. So the daily charts right now, as I mentioned yesterday, at this period of time, a little bit, the RSI is still bullish, the ARB, the MACD is still bullish. We're really overextended here on the momentum oscillator. So, it might kind of calm down a little bit here, but we'll see. So we're starting off pretty strong here. The spread is really starting to tick up. We're getting a little bit of a oversold condition on the momentum oscillator and a divergence here. So we've got from this high, so we'll do a little line here. We're kind of down here, but here, we're up. So we've got a divergence here. The momentum is down, but the indicator is up. So we'll see what happens. Let's see what our signal looks like right at the open. And it's very, very strong. So the ES is outperforming, even though the market is actually down. So right now we've got, I got to stretch this out a little bit. There we go. We're down 13 on the ES, and we're down 250 on the YM, but the spread, as you can see, is straight up. That's why we don't use the spread as a proxy or an indicator for the general market, because both of the ES and the YM are down. It's just that the YM is down more than the ES right now, and that's why the spread is going higher. So you would have made money on a positive spread. We're just gonna wait here a couple of minutes. I may cut some silence out of the video. It's at 4, so it's still, ES is dominating over YM, and that's basically what we're kind of looking at now. If we're using the we'll come back to the signal here in just a second. But if you're using TradingView, and you don't have my scripts, then basically what you want to do is you want to set this up so that you're using what's called a baseline. And so the baseline is at 100 for both the for the E-mini 500 futures and for the Dow futures. And so what you're doing is you're trying to find out what the benchmark is. Now you can use it based on percent. I would change these. Don't use regular, because regular you can move them around. I want a baseline here. So I want to index it to 100, and then I want to take a look. So right now the ES is performing stronger. It's at 101.19. This is on a 5-minute chart for both of these, and the YM is at 100.41 or so, and so it definitely shows that the S&P 500 is outperforming, even though the market is down significantly. Remember that. We are only looking at which one is the faster horse. The faster horse to the downside is the YM. Well, right now it's not really that sure, because we're still positive on the spread, just like just like on here. And now we've got the first line. First line is formed right up here. Now we're waiting for the second line, which is going to be our solid and confirmation line, and it's also resistance, or also your stop. So for example, this line, the dotted line here, can move around a little bit, but if we get a solid line down here, then it's going to be a positive day. Generally, if we get the solid line up here, it's going to be a negative day. But that solid line, wherever it forms, is also going to be your stops. Okay, so we got to wait another couple minutes for that to form. But here, you can tell that right now, if we take a look at the percentage changes, you can see that the ES is stronger than the YM. Now that can last throughout the day. And right now, the spread between the two is like 0.25 between the spread, which is not a huge spread, but it's also an average spread. So if I was doing the trade without the indicators, without the signals that I'm getting here, you want to take a look at the spread here between the ES and the YM. And right now on the cash index, it's about a 0.30% spread. And we want that to narrow. So we kind of want to see how this performs here. Looks like the YM is definitely weaker than the ES right now. So we'll kind of see how that plays out. The ES is a little bit stronger here. The YM is actually going down faster than the ES. Let's see what our signal looks like when we open this up. It's gone back up again, as you can see. Same as the what we see here. We can definitely see the YM is weaker than the ES. Okay. The other thing that you can look at, besides using the baseline charts, you can use a longer term chart. Actually, I forgot to mention this. If you're using a 5-minute chart, make sure you're 5 minutes on both. So you have to click back and forth to highlight those. Make sure you're on a 5-minute. You can change this. Now, if you go to a 15-minute chart, look what happens to the index. The index will change, because it's only measuring it for a 5-minute chart here. It's 101.24. On a 15-minute chart, it's 101.05. So now you got to change this. Make sure you're using the same time frame on both charts. So now you can see that actually the YM is just a little bit lower than the ES on the 15-minute chart. So the time frame that you're using these charts on is very, very important. If you go to a 4-hour, let's say we'll go to a 4-hour, then it's even different, even more different. So we've got actually the YM is outperforming at 112, and the ES is at 105.42. So the YM has outperformed over the last 4 hours. So you need to kind of make sure that whatever time frame you're on, it's the same on both charts. And you also have to make sure that you understand that if you're in a swing trade, you want to use the longer term chart to make that determination. If you're in a short-term trade, like a 5-minute trade, like a daily, like a day setup, a day trade setup for the spread, then you want to use a shorter-term chart, like a 5-minute chart. Okay, so we got a couple more minutes here, and I might cut out the next 5 minutes and do a silence here, and then we'll come back and see exactly where we are on the spread and see where we get the solid line. Okay, there we go. We formed the bar. It looks like it's going to be a positive day, and I will look to establish a long position. And let's go over back to trading view, and the ES still remains positive here on the 5-minute. So I'm going to go ahead and I'm going to enter the position on here. And I'm going to buy the S&P and I'm going to sell the Dow. And that is establishment of a long position now in the spread. And we'll see if that continues to, if the signal that we received here is good. I like to buy right here. Now this is also a stop loss. So for example, if we close on this 5-minute line below that, I'm generally going to be looking at it like, maybe the signal is not going to work out today, but we'll see. We'll see. We got a couple minutes to go before that 5-minute line closes. And we are down a little bit here on our position. And the spread is now, if I look at the spread, it's only 0.22. Remember before it was bigger. So let's see if that continues to hold. But the indication today is that we're going to go higher on the spread. When the solid line is below the dotted line, that indicates that the spread will move higher. I think it just got a little bit overextended here before. That's all. Just a little overextended. Okay, so the 5-minute is above the solid bar. 5-minute bar just ended, so it's above that. So we're just going to stick to our long position here. And right now we're up a little bit, about, let's see what we're up. We're up $60, $70 right now. We'll stick with the long position, and we will come back at the end of the day and see how we did. So there is one rule that you really need to pay attention to when it comes to the volatility arbitrage trade, and that is that at any time in one single trading session, the spread between the S&P 500, which is here, and the Dow, if that's what you're trading, if you're trading the S&P 500 futures and the Dow futures, if the spread is 1%, and we're getting very, very close to that right now, you need to close out the trade. Over the 7-year period that I've been trading this, that has been a rule that I follow, because a 1% is an outlier to this trade. So when we looked at the histogram, the average move was between minus 0.5% and plus 0.5%. Anything over a 1% spread between the two of these, subtract these, and you get we're pretty close to 1%. Not quite there yet, but pretty close, and about 93%. 0.93%. So when you're at that point, you need to exit the trade. It's always a mistake to stay in the trade longer than that. Of course, sometimes it does continue to go higher. It's quite possible, but at that point, it's very, very stretched, and typically there's some sort of a rubber band effect where it snaps back the other way. So I'm going to be exiting these trades. We're currently up $1,682 on these trades from this morning, and I am going to be closing those out. Now, since we've had quite a run up, we're starting to come back a little bit on the Dow. I'm going to be closing out the S&P 500 first, and then I'll close out the Dow futures. So very nice trade today. It was slightly unusual because it was Fed Day. The Federal Reserve raised interest rates, and there was a huge amount of volatility. If we go back to a normal regular chart, you can see that we went about 130 points on the S&P 500 for the range, and we went approximately 500-600 points on the Dow here for a range on the day, and yet the spread remained quite steady, quite calm, and did its job based on our signal this morning. All right, that's it for today. I'll come back with another video and do some additional tips that you can use in this particular trade to make it work even better. We are just about to open here in about a minute. We've got the ES and the YM spread pretty strong here, about 0.9% on the spread to the positive side. We're going to take a look at our indicator this morning. The spread continues to move higher here. We've got the 5-minute chart up here. There's the bell. We are going to wait for our indicator to give us an idea if this spread is going to continue to expand higher, or we're going to get a bit of a reversal. If we get a bit of a reversal, we're going to go short the spread, but we need to see what our indicator is saying this morning. Now we're just about at 1% right now. Let's see what the indicator is saying. We should have it in about 4 minutes. So we've got our first line here. It's down here, so it could change a little bit as we continue to move, but certainly very, very bullish on the spread. Very strong move here. It's a 1.5 point spread now between the ES and the YM. When I showed you the histogram the other day, a 1.5 point move on a single day is an outlier. It's definitely an outlier. So this is a great day to actually do this video. Very instructive. All right, let's go back to, that's our hourly. Let's go back to our 5-minute chart here and see where our second bar comes in. We got about 4 minutes before our the second bar comes, the solid line bar comes in. Let's just take a look at the daily chart. We are in fact, the RSI is so bullish it has it twice. It's bullish. So it's very, very strong. It must be super bullish if it's listed twice here. Dominance, though, because the Dow has outperformed the S&P 500 now for several months. It's still negative, but it is trending higher. It is trending upward. But we're way oversold on the momentum oscillator. We are way oversold on the RSI. Should be interesting. Let's see what the 5 minutes going to give us here as far as a signal for today. When the market is this far stretched, though, if we're already at a 1.5% difference in the prices of the ES and the YM, I would not take a long position. The rule was that you get out when it's at 1% or more. So this is even larger than a 1% move. So the only opportunity that we're going to have today to trade this, if we do it on a day trading basis, is to go short the spread. So let's see where we end up here. We got 3 more minutes before we get the next bar. But the only opportunity we're going to have is to short it. We cannot buy it long. Even if it gives us a long signal, we can't buy it. The chances of it actually moving any higher are diminished. So our only opportunity is to sell it. Yeah, this is an instructive day. So if it's already 1.5%, you're supposed to sell the spread when it's at 1%. We're already at 1.5% here. Our only opportunity is going to be available is to sell it, even if we do get a buy signal here. We can't buy it at that level. If it's already 1%, you can't buy it. Oh, it's negative. I am going to sell. And I'm going to do the same thing here. Trading view, not the best entry points, but they're okay. That's fine. I'll take it. So we have a down signal here. We've got a solid bar here. We've got our dotted lines here, which indicates a down day today. Very interesting. So we took a short position here. So I will come back at the end of the day. We'll wrap up. I'll also give you some additional instructions on how to use TradingView if you want to use just TradingView in order to trade. But really, the one thing that kind of sets this system apart are the indicators. So you've got all of the custom indicators here, including the dominance and the support and resistance here for the trade. And so it looks like it's going against us a little bit right now, but we will come back at the end of the day and see how we do. We are back at the close. We got about 9 minutes before the close. It's 3:51 right now. And we turned positive. We're up approximately $1,300 right now on our trade. On a day like today, when the market opened, we were already up 1.5% on the spread. And if I show you the bell curve again, the histogram, you can see that a 1.5% move is an outlier. It's way up here. It actually hit 1.86%, or close to 1.8%. So it's definitely an outlier today. And so when it got up to here, and I went short and I added to the position, and then it started coming back down again. But we did have a negative signal. It doesn't mean it's going to trade below these lines, but it does mean that the probability is that the spread is either going to stall out or it's going to reverse. And it did stall out, and it has reversed from when we got into it. And so right now we're still up about $1,100 or so, $1,200. So it's coming back a little bit, but we're profitable on both sides, which is like I said before, it's very unusual. It's not something that you typically see as the market, on the spread. So very unusual day. I'm trying to determine here at the end of the day whether I should take my profits or I should stay in the trade overnight. So that's kind of what I'm thinking about right now. We do have a bit of dominance downturn. We have it on the 1 hour. The 4 hour is still high. So my feeling is I'll probably stay in. I don't know. We'll see. We'll see how we end up at the in the last few minutes here. But a profitable trade once again. And so now let me just quickly show you how to set up your charts on TradingView. What you want to do is you want to do a new layout first. So let's do a new layout first. So now we've got a new layout, and we're going to do side by side. This is how I typically do it. And you want to click on the window and then add the symbol. So in this case, we're going to have the ES on this side, and I'm going to click this window, and I'm going to have the YM on this side. Now, the thing that I like to do is instead of being able to change these vertical prices, I want to right-click on that, and I want to go to a index of 100. And then what it does is it prevents me from moving this up and down, so I can get a pretty good idea of what the spread looks like between the ES and the YM. The YM is 100.75. I've got 103.63. For this time frame, I'm on an hour time frame, so it will change based on the time frame that you have up here. So make sure you're both on the same time frames. Both windows are on the same time frames, and then you can basically leave it the way it is. I kind of like to use the baseline charts. So if I go over here, I'm going to use the baseline chart, and all that does is really kind of give me a visual of not only where each one of these are on the 100% or on the index base of 100, but I can move these around too. So I can move this up to where where I got into the trade, and I can kind of visually see, hey, I'm short this one. I want this to go down. I want this to be in the red zone. This one I'm long. I want it to be in this zone up here, and I want it to be green. So that's all you have to do is set this up on TradingView. It's very easy to do, and then you enter your trades. The only thing I want to do is I want to watch this spread between the ES and the YM. It's come down to about 1.19%. It was as high as 1.75, 1.8% earlier in the day, so the spread has come down pretty significantly, but I think it's probably going to go down a little bit lower. I don't know. We'll see. But I'm going to watch it and see if I want to stay in it for a swing trade. If I do, I will certainly let you know tomorrow morning. Have a great night, everybody, and I will talk to you again tomorrow. I'm going to give you, and we'll do the setup again. We'll go through the setup again in the morning, just like we did the last couple of days. And I'm going to give you some additional tips and what to watch early in the morning and at the futures open at 6 p.m. so you have a better opportunity and better chance of picking the right direction for the spread. And I'll do that in the next video. Open, but we just got the employment numbers, and the markets are really moving. We were up a little bit on the S&P 500. The Dow was down just a little bit, like 20-30 points. Now we're down significantly on both, but as you can see, the spread has extended significantly. Now this is another way, and I'm just going to go ahead and save this, and what I want to do is rename it. And I'm going to call it the spread. ESYM spread. And you can do this easily. It's not the same as Thinkorswim. It doesn't give you a single line, but what it does is it gives you two lines. And so so here's my entry for that. Okay, so I can do that. I did stay in overnight, so I'm up about $3,200 on the spread right now. But this will give you a pretty good idea of the difference between the ES and the YM. So what you do in TradingView is go to compare or add symbol. When you have just the YM up here or just the ES up here, either one, and then you go to add symbol, and then you can just add this other symbol that you want, and it will create this chart for you. And I always use the baseline. I like the baseline when I do comparisons between two symbols like this. And so you can see that the S&P 500 futures have really outperformed the Dow futures. You can see it very clearly on this chart, but we don't have any signals, of course. We don't have any signals at all about what the indication is for the spread itself. But when you look at this, you can see that it narrowed here and then it got wide. So this was a pretty good trade to take the ES longer and the YM short position, because the only thing that we're really trading here is the difference in the spreads, the difference between the ES and the YM. And so when you think that the spread is going to widen, you want to go long the ES and you want to go short the YM. But they don't give you any signal. So, I mean, you're basically just kind of betting whether or not the spread is going to increase or decrease. So, it's a bit of a it's a bit of a gamble here, really, if you're just using this. But it is a good visual representation. If you can't use TOS, it gives you a good representation of the spread itself. You can see how wide the spread is right here. Very, very wide. And so at that point, when the spread is so wide, it's probably a fairly good bet that it's going to narrow, and that's why we're currently short the spread right now. If we go over to the ARB setup, you can see with the two charts that we're short the S&P 500, we're long the Dow, and so you can see what the setup is. We shorted the spread. And then if we go back to the ESYM spread, you can see how far apart we really are. And when we're really that far apart, the chances are and the probabilities are very high that they're going to narrow. So I'm gonna come back at the open and see how we did, but we're up about $3,200 on the overnight. This is the first swing trade that we've actually been in since we started doing these videos. And so we're up right now on the spread for the second day. We've been in this spread now since yesterday morning, about 24 hours. It may last another day. I think there's a lot more, probably more to the spread will narrow a little bit more, but we'll wait till the open and kind of see how we see what the 5-minute signal is on the Thinkorswim platform based on the support resistance indicator. Here we have our first 5-minute bar. We have dominance on the 5-minute is negative at 0.8, and going to keep an eye on that. Looks like we're getting a little bit of bullish movement here. We're still in our overnight trade here, and we're up about $3,400. So let's see what the indicator is telling us. It's going up a little bit here. Dominance is 0.2, 0.3. I'm watching this number right here, 0.5, 0.3. Kind of want to see what the indication is for the day as soon as the solid line comes out. Otherwise, we'll just go ahead and take our profits here, $3,400, $3,500 on the overnight. So we kept this overnight on a swing trade basis rather than a day trade basis. Dominance looks like it's weakening a little bit from 0.3 to 0.5. But the opening is usually pretty volatile. The opening is volatile because there's a lot of overnight orders that come in. So 401ks, if anybody wants to sell or buy their 401k, those orders are sent overnight to the exchange at the open within the first 10 or 15 minutes. Then that is when those are executed. So there's lots of buy and sell orders coming in the market at that as soon as it opens here. So we'll just watch. We got a couple more minutes before the 9:45 bar is formed. Dominance is still negative, but looks like everything is kind of, I don't know. We'll see. I don't want to predict the market. I just want it to tell me what is going to, what the highest probability trade is, either to stay short the trade, which we are because we're short the S&P futures and we are long the Dow futures. So that is a short spread position. So in these videos, I try to cut out as much of the dead air time as possible, and then we come back when that bar is formed. Okay, dominance has gone positive. We got to about 2 more minutes before the open, or before the second bar is formed here. It looks like we're going positive here, but we don't want to predict. We want the indicator to tell us what's going to happen here. Well, we have a line way up here. So the indication is negative for the day. There's a solid line. Indication is negative for the day. We are currently up about $3,300. So we will kind of wait and see what happens during the day. And but we've got a negative indication on the first 5-minute support resistance indicator. Now, just as a reminder, this is a custom indicator. You can't get this on TOS. The ARB dominance is also a custom indicator. And so all of these indicators are included when you do purchase them for one price. If you're a retail investor, it's one price. If you're a registered investment advisor or other market professional, there is another price for you and an annual licensing fee. So, but no licensing fee for retail traders. If you're a retail trader, there's no licensing fee, annual licensing fee. But if you are a professional, there is one. All right, we will come back at the end of the day and see how our trade fares. We're getting a negative indication here, and for the day, and we'll come back and this is my other trade there, and we'll come back at the end of the day and see how we fared to close out the day. And we are up $3,797 approximately, and so we're going to close the trade out. About 90% of the time, I don't hold it over the weekend. So I will be exiting this position. I don't. 10% of the time, if I do hold it over the weekend, it's if I have a smaller profit. If the moves were smaller and it was heading in the direction of my trade. So right now, I mean, it's about a 0.60%, which is above the average. It's above average move today to the downside. So I am going to be exiting this trade, and we're at 38. Let's see if we hit 3,900. That would be very nice. But 10% of the time, I do hold it over the weekend only if the spread is a little bit smaller on a daily basis, and there's a chance and the possibility for it to continue in that direction. But the overall trend for this trade in particular is still up, and I'm short the trade, so I don't want to be caught over the weekend with the trade on the short side. So it's still, the long-term position is still long. So I'm closing both of those out. Nice profit on that, about $3,800. And so hopefully you've had a good opportunity to see how this works. And in the next video, we're going to be doing some simple charting, support resistance areas, and some other technical patterns that work with this particular spread. And I'll see you in the next video. Talk soon. Bye. Volatility this morning in the spread looks like we started going higher here. Now we completely reversed. We've got our first line drawn. Let's see where our control line comes in, and then we will make a decision on a trade. At least on the 5 minute, we're bearish. Dominance is negative here on the 5 minute as well. So somewhat of a reversal here at the open, and the open is the most important because you really want to see, what the rest of the day is going to be like. As I mentioned before, typically what happens during the opening session, the spread tends to continue through the day. And so we're kind of negative on everything here, but there's a lot of volatility, as I mentioned, during the open because of the 401ks, the institutional traders coming in, taking positions. So we're going to wait for our signal. Okay, we printed our control line. Okay, in this case, very unusual. The indicator is right on top of each other. So now what we're going to do is I'm going to teach you how to trade based on dominance. So we're going to watch the dominance for a few minutes here and see if it's trending positive or negative. So we were negative a little bit this morning. We were bullish or bearish on the RSI. Now we're bullish. The dominance is about 0.78, 0.8. Let's see if that continues to improve. If it does, we'll take a long position. If it goes negative, we're going to take a short position. So now you can trade based on the dominance alone. Is our control line, and our first line here is right on top of each other. Pretty unusual situation. So interesting. So we're dominance is now 1.1, 1.2. It's likely that we will see a positive dominance throughout the day, but we just want to kind of watch it for a few seconds here to see if it stabilizes at that level. It looks like it is stabilizing at that level. We're getting some bullishness here. Let's see if it comes down. Now, these two lines also form some support and resistance. So if it comes back down to that, I may take a long position here. Let's see what it does when it closes on the next 5 minute bar. So let's see if it closes above or below our control line. We have 3 more minutes before that line closes. I want to see if it closes above or below, and I want to keep an eye on the dominance. So we're going to be able to trade based on the dominance and whether or not the support resistance lines are the 5 minute line is above that or below that. So this is another good instructional video because what we're really doing here is we're trying to determine, using the support resistance lines in the control line, whether or not we should go short or long without depending on those entirely. We're also looking at the dominance. So we're looking at dominance and we're looking at the support and resistance lines. So if we're above this and dominance is positive, we'll take a long position. And if dominance is negative and we're below this in the next 5 minutes, then we'll take a short position. 1 more minute and that 5 minute will close. We're still minus 0.1 on the YMES, but it looks like we're kind of moving higher here. It looks like we're stabilized on a positive dominance, and it looks like we're going to close above the support resistance line, so we're going to take a long position. A long position is long ES and short YM. But we got 1 more minute here. Yep, it closed. Okay, we're above it. We're going to take a long position. And so that's long ES and short YM. And we will come back at the end of the day to see how we fared. And as I mentioned this morning, you can trade based on the dominance. So we didn't get the signal. We got a neutral signal. But their dominance here has gone all the way up to 3.1. And the spread went higher for the rest of the day. So our position now on the YM and the ES is up $1,100. So we're in good shape here in profit. And we could hold this for an overnight position. The daily, it looks like the dominance has been moving a little bit higher, very, very slowly. We're a little bit oversold here on the RSI. The RSI has been pretty strong as the spread has continued to move higher. So we will take our profits and not stay in the trade here, but it certainly doesn't look like it's still moving up. But we can do some day trading and continue to trade this spread on a daily basis. So 1077, I'm going to take off the YM. I'm taking off the ES, and we had a nice 1100 point gain for the day. Hopefully all of these videos have been instructive. Don't forget to watch the last video, which is on charting, which is also really important. So now you know that you can do many different things here. If you want to trade the spread based on the dominance, you can do that. You have the signal, you have the dominance, and you have all of your other indicators to help you decide whether or not it's an oversold or a undersold position. And we're also coming up right up against this top right here. So don't forget these support resistance areas do work, and we're right up against that resistance area right now. So we'll see if that holds or we continue to go higher. But I will take my profits for the day, and I'm good to go. Okay, in this video, rather than doing real-time trading, we are going to take a look at the technical analysis that's involved in this trade. And so it follows some pretty basic technical analysis. You can do real basic stuff. And so, like, for example, back here, we had a rising trend line, and it stuck to that. Now, typically, I don't do the technical analysis on a daily chart as much as a 1 hour and a 4 hour, and we're going to go to those in just a minute. But I want to point out a couple of different things to you. Number one is I have this zero line that's set up, and if you load this, my windows from TOS onto your TOS platform, you'll see that those are already drawn in. The rest of these are my drawings. So I've drawn these basically as support. This was a resistance area. This was a support area that was broken. This was a rising trend line. This is a rising wedge pattern that I identified, and most of these are already on the 1 and the 4 hour chart. So we're going to go over and take a look at those. But typically when I'm doing technical analysis, I'm going to take a look first at the daily chart, and I'm going to take a look at whether or not we have dominance rising, and it looks like it has hit kind of a low here. It has gone up, but it hasn't gone at the same pace as the spread. And so the dominance has definitely gone higher. It's still negative though. It hasn't gone positive yet, but it has been rising. So I want to take a look at that, and I want to see that the spread itself has actually been going higher as well. Overall, it's somewhat bullish. Now, the other thing that makes this bullish is the low level that it was at the very beginning. So let me take these lines off here, and I will show you how I would identify doing basic technical analysis on these for the spread itself. So on a daily, we want to identify those major areas of support and resistance. And you can use a trend line for that. You can use price levels for that. I typically use a trend line. So I'm looking at this point here on the daily. This goes back about 3 months. So I'm going to draw a line right over there. And I just wanted to make sure that it's even. So I'm going to go ahead and edit those properties, and I'm going to take a look to make sure that the values of the beginning and the end points are the same. Now I'm going to change it here because I don't want to confuse it with some of my other indicators, and I'm just going to change the color to a yellow here. So this is a resistance line. That was in order for it to be resistance, it had to come up to that level and then sell off significantly, and it did. So I would call that resistance. We came up very close to it recently, but we didn't surpass it. Maybe on a 1 hour we did. We'll have to take a look at the 1 hour and the 4 hour. The other area that I'm looking at as I look at this particular pattern is this little double bottom. It looks like it broke through here, and I want this absolutely even. So I'm going to do 0, 0, 0. And again, I want to change this. And I'm actually going to change this to my default. So I'm going to save it as my default here. So now I've got an area here that the spread has been moving in up and down. Now, one of the other things that I noticed on the smaller time frames was this rising pattern. We broke through the previous support. This is support, right? Just like this was resistance where prices came up to it and it dropped sharply. prices came here and rallied sharply. So this is a valid area of support. When it started breaking through and then came back up through it, it did break through and then come back up, and it used it as support. On the one in the 4-hour chart, there was a nice trend line that was rising here, and we're going to go over that and go over there and take a look at it. The other thing that you can do, which is nice on these on the spread itself, is to create trend lines like this. So it connected this point, it connected this point, and it connected that little point. Once we broke through that trend line here, that's also a very good indication of a long trade. In fact, that's a nice swing trade right there when it breaks through those levels. So this is a descending wedge pattern that was broke out to the upside. And so now, because we're on a daily chart, you could have stayed in that from January 13th all the way through possibly this particular high here. I probably would have been looking at exiting here at 120. So that's a 7-day swing trade that would have worked out very, very well for you. All right, let's go to a shorter time frame, because the majority, the daily is where the large support and resistance and trend lines come into play. And then we're going to go to a 1 and a 4 hour to kind of narrow that down just a little bit more. That's the 5 minute. I want the 1 hour. Yeah, we'll go to the 1 hour first. No, let's go to the 4 hour, because I did the daily. We'll go to the 4 hour, and then I'll come back. So let's do the 4 hour, and then we'll go to the 1 hour. So on the 4 hour, you can see that our lines from the daily chart are still present if you have that turned on in your TOS system. And so that trend line was pretty valid even on the 4 hour. So once it broke through there, you still had a very nice swing trade higher. But we have some, we also did break through that upper resistance and then closed below it, just like we dropped below this previous support level and then started to rally. So these support and resistance areas work pretty well on the spread. They don't work, if you've done support and resistance areas and you've done trend lines on just the individual issues of the Dow, the S&P 500, the NASDAQ, and the Russell 2000, they don't always work, because as I mentioned in the introduction video, there's a lot of manipulation of the individual futures contracts, the index futures contracts, by large players. And I'm not talking about illegal manipulation. I'm talking about legal manipulation. And it's just because they have so much capital they can use to move the markets that they can actually adjust these prices. But they can't generally take the larger trends. So the spread is really about larger trends, about whether or not people are purchasing the S&P 500 or they're going to safety by purchasing the Dow. And that's what really makes the spread move. So on the 4 hour, the same lines look pretty good. We don't have to do too much adjustments on these. But what else can we look at here? We don't have a whole lot except this one right here. This is the one I identified before this line came into play. Actually, you could put both of those in there, but I'm just going to remove that one for now. But we had a rising trend line here. Let me just pull this over, zoomed in a little bit. We had a nice rising trend line here after we came back above this area of support, and it touched it a couple of times. So it touched it here, we had it here, and then we had it here, and then it took right off. So a rising trend like that, unless it breaks through to the downside, is going to break to the upside, right? This is just basic technical analysis. We also have this area right here, which is kind of interesting, right? This is an area that was formed, and I need to get this exact if I can. There we go. Whoops. Right there. I'm just going to make sure that the levels are exactly the same. I want the levels exactly the same. So I'm going to change these to make sure the beginning point and the end points are the same. So we've got this area here, which was previously support, becomes resistance right here. When it came down to this lower trend line, we didn't know if it was going to break down this way or it was going to break higher. But as soon as it broke higher, there's a second confirmation there that, in fact, the spread was going to go higher, and you could have bought right here for a long trade. So even if you don't have, and now the 5 minute the 5-minute indicator that we use for determining the trend of the day could have been used very effectively here, because if we got a long signal, that's additional confirmation that in fact we are probably going to go higher on this spread. And so it's very important that you look at that 5-minute indicator, which sets the tone and the spread for the day. And so we broke through here, again, a very good signal indicating that we're going to go higher on the spread, and you should take a long position on the spread. All right, now let's take a look at the 1 hour. Now the 1 hour is a little bit more sensitive to movement because it's a shorter time frame. And so let's take a look at that. We have all of our same trend lines here, but you can see there's quite a bit more noise involved. There's more noise in the 1 hour. It does move around, but the same trend lines hold pretty well. Here's the support areas. In fact, we could probably bring this over a little bit more. We had another support area here. We had one here, we had one here, we had one here. So this is a valid area of support that was broken through to the downside. But again, we had this rising trend line, but the rising trend line is a little bit different here. We have to adjust it just slightly because of these points here on the 1 hour and the greater amount of noise that's involved in this trade. Again, though, we hit the previous support area here. It became resistance, came back down to the trend line, and then on the 1 hour, we ended up breaking through again. So I would have taken, again, if we were on the 5-minute chart and we got a 5-minute, our indicator on the 5-minute chart indicated that we were going to have an up day, I would have taken a long position as it broke through that resistance and gone into a long swing trade there. So again, very, very easy to do support and resistance areas with the spread. You can use trend lines, rising trend lines, declining, descending trend lines. You can use support and resistance areas. In fact, they work, from my experience, they work better than they do on one of the or individual issues, as I mentioned. All right, guys, hopefully this is helpful for you, and I wish you all the best. Good morning, everybody. We are going to do another video here on the volatility arbitrage trade. So we're just kind of waiting for the market to open. Let me just fix my dominance chart here. It's at minus 1.67, so it's way down here. I just want to make it a little bit bigger, see what the trend line looks like. And we have a trend line that has been moving down since 8:45 a.m. Eastern time. It has been going lower. But I have two trend lines here. And if I bring up a longer term chart, here's a 4-hour. Let me get to the 1 hour. Where's the 1 hour? Here's the 1 hour. So I drew this on the 1 hour, and basically what this is in traditional technical analysis is a descending wedge. And a descending wedge, or a pennant, you could call it a pennant as well. And a pennant is typically a pattern in which if the previous move was higher, a pennant indicates that the next move will be higher on the spread. Once it breaks out of the upper pattern. So if it breaks down below the pattern, it can reverse. It can still reverse and go through the upper line here. But typically what it'll do is it'll kind of form this pennant pattern and then go higher. We have a major resistance up here, which we kind of breached for just a few hours, and then we went below it. It was a major line of resistance there, so I wasn't surprised to see it go down. But yesterday we did get a signal for a higher, let me go back to my 5-minute chart, for a higher spread, and that failed. So I ended up losing money on that, but it's just a reduction of profits, which is, normal, right? So you're going to lose 20 to 30% of the time. 20 to 30% of the time, these signals do fail. And just like any other trading or business or anything else, you're not going to make money all of the time. There are some things that you're going to end up doing that lose money. Yesterday was one of them. We did go lower. We did actually go a little bit higher, and I could have gotten out right here. See, not only are these lines the signal lines, but they're also support and resistance. That's why I call them support and resistance lines. So it came back up into the resistance line, and I could have gotten out there for a relatively small profit, but of course I hung on to it and got out at a much larger loss. that's exactly what happens sometimes. Okay, that's real life, guys. You're going to lose money occasionally because you make dumb decisions. I should have gotten out there, but I thought it was going to keep going. It didn't. It ended up going back down, and I got out at a greater loss. Considering that we've been profitable just about every single day, a one-day loss in the grand scheme of things isn't really that big of a deal. In business, I've lost money. I mean, I've invested, at one time, there was one business that I invested in, about 8-10 years ago, and I had $125,000 in expenses. I made $25,000 in sales, so net, I lost about $100,000. Yesterday I lost $500. So I mean, I made about $7,300 over the last 5-6 days. Lost $500 yesterday, so that reduces my net profit to about $6,800. It's still a lot better than losing $100,000 on a business idea that didn't work out. All right, so I would take this business any day of the week over investing in locations, equipment, supplies, inventory, leasing. Definitely. I would definitely take this business. All right, so we've got about 4 minutes before the open. I'm just going to let the recorder run here. Let's see what kind of a signal we get today. I have looked at other hours time frame. So we've got a 4-hour here that is also pretty much staying within this pattern. We'll see what happens. We got 1 more minute before the bell rings, and then we'll take a look at our signals and see where we are in just about 15 minutes. And I'll come back to you at that time. Okay, we have our first line. And looks like we're going a little bit higher on the spread. And we will take a look. So it might be a risk-on day, but we'll wait for our second line. Okay, so the signal is short today, so we're going to be taking a short position, and we go short the ES, and we will go long the YM. And then we'll come back at the end of the day and see how we did. Okay, we are back, and we did have a very nice downturn here today. So the signal was really good. We went down right down here at the bottom. We were up about 500, 600 points, almost 600 points. But so I decided to get out. I didn't do the recording then. I wanted to kind of wait to the end of the day to show you one more additional script that I'm going to include in the downloads below. And that is called the R-Bias Confirmation. And so this is a script that I've been working on for a while. It's brand new. I've been using it pretty successfully to determine when to get in and when to get out of positions. And you can see that it hit a low point right when the spread hit a low point here. And this low point right here told me that we were done. I mean, basically the decline was done, and I don't know if it was going to go back up or not, but that was the time to take profits. And so on this screenshot, I show you on the screenshot, we were up about almost $500, about $487 here. And so that's when I got out of this position. And I don't know if you can see it or not, but it was at 10:01 p.m. Just after I had posted this image into the Tradingology Slack channel. And it worked out very, very well. Now this new script will be included in your download. It's really, really good. So what it does is it tells you when things are a little bit too overextended. So for example, this is a 0.5% change. This is a half a percent change. The numbers that you see down here indicate on a 5-minute chart what the percentage change is for that 5 minutes. And you can see that it's gone from like a 0.5% lower on the day all the way up to a 0.19. So we're actually going up from this point. So we've actually gone up from this point to a plus 0.19 from this point. So during the whole day, though, we are still down on the spread approximately 0.10%, but we were at one time down as much as almost a 0.5%. So I didn't catch it quite at the bottom. It was about $600. I caught it just as it was starting to go up, $487 for the day. But it's a great trade. Today's Friday, so I'm out of the trade. I'm not going to hold it over the weekend. I wish you guys the best of luck and continued success.